Good morning. Monday, December 28th, 2021. It's 10 o'clock. We're going to get started. This is a special Commissioner Court appearance today. We do have an agenda, and I call the meeting to order. Acknowledge any guests here today and appreciate them coming. We open it up for a public hearing if there's any. Hearing none, close the public hearing. Number one is to deliberate and consider action on the following items. It'd be a presentation made by Charles E. Reed and Associates on the annual financial report for the year ending December 31st, 2020. And that'll be presented by Mr. Milton Portillo. And after he presents it, we ask for a motion to accept. So turn it over to you.
Judge, with your permission, since I'm fighting a loose valve that remains seated.
Yes, sir. And let me reset just for a second, and I'm gonna run down and get your report. I don't know, do y'all have y'all? We run back down and get mine. Okay.
That's a loose valve.
Thank you.
I have some other report from that.
Okay, let's go ahead, Mr. Milton.
Okay, I'm going to start by calling your attention to the opinion letter, which is about the 7th page back. And I'd like to start by reading the opinion. In our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, each major fund, and the aggregate remaining fund information of the County of Newton, Texas, as of December 31st, 2020, and the respective changes in financial position, and where applicable, cash flows thereof, and respective budgetary comparison for the general fund for the year then ended in accordance with the county principles generally accepted in the United States of America. This is known as an unmodified opinion. In layman's term, a clean opinion. So you're to be congratulated for a clean opinion. The next section of the report, beginning on page 4 through 9, is what's known as management's discussion and analysis. There's a lot of good information here, comparative information. This is the county's portion of the audit report. I would encourage you to read through there, look at the prior year versus current year. As I said, a lot of good information. During the course of the audit, we talked with various staff, elected officials, and I was asked a lot of questions by various individuals, something that we have not experienced in the past. But I thought at this moment, before we got into the financials, I would answer some of those questions that will explain what the financial statements mean in the back of the financial section. The most common question I got was, what is the difference between regular accounting and governmental accounting? And the report is broken up between what we call Exhibit A and Exhibit B, which is known as the government-wide financial statements. And then the statements following those are what's known as the fund statements. Newton County has various funds, numerous funds. Everything from the general fund, distribution fund, payroll fund, there's a prison guard fund, and commissioner's fund, road and bridge, and what have you. The government-wide statements, basically the difference there is the terminology. We have, in the for-profit world, we have a balance sheet. In the governmental world, we have a statement of net position, And we have a statement of activities, whereby in the for-profit world, the statement of activities is known as a profit and loss statement. On the fund side of this, in the fund statements, no debt and no assets are carried in the fund statements. They are carried in the government-wide, which are designed to make the financials look more like a for-profit business than a governmental financial statement, and they're very confusing. On the governmental side, in fund accounting, we have a line item called capital outlay. If you go out, and Commissioner, if you were to buy a $200,000 grader, it probably wouldn't get one for $200,000, but if you were to get one, it would be charged to the fund statement in that line item called capital outlay. But back on the government-wide statement, that looked like a for-profit world, they would be carried as a capital asset and depreciated. If you recall, I told you that in the fund statements do not carry debt and they do not carry assets. We have capital outlay, and then you will also see when we get to them, there are two line items: principal reduction and interest. And that's where the debt is carried. And it's charged directly to the bottom line, which is the fund balance. In the for-profit world, when you pay a note at the bank or wherever you pay it, the principal portion is charged to the liability account, which is the amount you owe, and the interest is charged on the income statement as an expense. So there's a big difference between governmental accounting and for-profit accounting. Now, for your business here, I was asked the question, what is fund balance? It appeared that there were some folks who thought that fund balance was cash. That is not true. In the for-profit world, fund balance is known as equity, which is assets minus liabilities and the equity. In the government world, in fund balance, we start with assets, which do not include capital assets, which is your vehicles and equipment and what have you. That fund balance, fund statements do not include debt, which is your liability. Now, in fund accounting, some liabilities are carried, such as accruals, accounts payable, payroll accruals especially, primarily it. And then the fund balance becomes the, quote, equity. And we don't call it equity because that's not a proper term, it's called fund balance. Now, with fund balance, to make the financial statements work, fund balance is carried from year to year. It's carried forward. Someone asked me, well, why do we carry it forward? Because it's not a true number. Well, that's not true. Fund balance has to carry forward to make your financial statements balance. The fund statements start with what's called Exhibit C, and we'll get to that in a moment. And then Exhibit C1 reconciles that fund statement back to the government-wide statement, which is Exhibit A, and then Exhibit B1, which is the statement of activities. It is reconciled back from the fund statement to the government-wide statement. And as you recall, I told you the government-wide statement looked more like a radiator shop or the cleaners down the street or whatever, like a for-profit business. I got a couple of questions on debt. It seems that there was a concern of one of the commissioners that, well, heck, if I would have known this, I wouldn't have bought this. Well, Newton County historically has had very little debt. Anything that you finance on 3 to 5 years. You've never issued any general obligation bonds that I'm aware of, or revenue bonds, with the exception of your component unit, which is the Public Facilities Corporation. So everything you do here in the county is on short-term debt, 3 years, 5 years. That's the most I've ever seen. And I'll call your attention back to page 32 and 33. This is your debt. On page 32, it's a combination of all of your debt. And on page 32, and this is something that I pay close attention to, is that this is what's known as debt service. This is how much that you're going to have to pay in the next 5 years, broken down by year. So in 2020, in 2020, your debt service, principal and interest, was approximately $710,000. In 21, that debt service is $747,000. Now, there is a difference of approximately $30,000 if you'll see that. But again, it's not a major difference between the years. You don't have to pay all of that in 1 year. Now, when you look at the fund statements, you will see that when you buy that $200,000 grader, it is charged as an expenditure to capital outlay. And then it's reconciled back to the statement of activities, which is Schedule B in the front of the statements. When deciding whether to purchase an asset, rent an asset, or just rent it by the day, when you need it, some of the considerations that you should look at is maintenance. I have brought up on several occasions in the past that the county possibly look at creating what's called an equipment replacement fund and start putting some money aside to replace equipment as it ages and the maintenance goes up, to replace the equipment using the money that's set aside in equipment replacement fund. Being as you carry your debt on such a short-term basis, it's one way or the other. It's a management decision. It really makes no difference because of the fact that your maintenance cost is always low because of the fact that the equipment is relatively new. You buy a dump truck that may be used, you buy a bulldozer that may be used. But basically, over the long run, your maintenance costs is down. That brings me to the next item I was asked, and it came up. One of the Justice McKees has a copy machine coming up. Do we lease copy machines or do we buy copy machines? Do we have a maintenance contract? Do we not have a maintenance contract? Again, that's a management decision. It's outside of the scope of our audit. However, when you look at a piece of equipment, what do you get with that maintenance contract? In the copy machine business, you get either the copy machine fixed or replaced within 24 hours or so, and you don't have the expense of the toner. Toner's pretty expensive. So when you're looking at that coming forward, you need to look at, what is my cost going to be maintenance-wise, and then what is the cost of a maintenance contract? Weigh the two, make your decision. But when these copy machines, if you were to purchase a copy machine, and that copy machine wears out, breaks down, or whatever, that's your cost. Same thing with a piece of equipment. If you were to have it with a maintenance agreement, they come in, they take the copy machine, give you a new one. At the end of the lease, you get a new copy machine. Otherwise, you'd be buying another. So you need to look at those costs. Another question I had, and this is a biggie. This is a big expense. Do we continue to pursue grants Grants are costing us money. We don't have the cash. What do we do? Well, the first experience that I've had with these called hazard mitigation grants that come from Homeland Security was Hurricane Rita. The county got whacked pretty hard. You had hundreds of trees down. Without seeking a hazard mitigation grant, the county would have had to bear all of that expense. These grants generally come when they start off. Well, the government's going to pay 75%, you're going to pay 25%. That's what FEMA walks in the door, FEMA tells you, this is what's going to happen. Then they may come back a month later and say, okay, well, we're going to increase it to 80%, you're going to pay 20%. And only one time have I ever seen them come back and say, well, instead of 75%, we're only going to pay 60%, you're going to pay 40%. So do we continue to go out for grants? That's the commissioner's decision, the management decision. It's outside the auditor's purview. So the question then becomes, are we going to bear this cost 100%? Or are we going to bear this cost 25%? Last year, gosh, Judge, you and I have had this discussion over the past few years. We got hit by hurricanes, tornadoes, floods. I think we had 3 floods. We had a courthouse burn back in, was it 1999?
05.
99, 2000, somewhere in there, well, whatever. But without the courthouse restoration grant, we would not be sitting in this room where we're at, because that was a lot of money. And that spanned over a number of years. Last year, you had Hurricane Laura, you had Hurricane Zeta. You were still recovering from some of the ike damage. You had a flood, another flood down in Deweyville. And I think this year you had a tornado.
Yeah. And ice storm.
And I forgot to freeze, and COVID.
Yeah.
So you had a lot of expense. You had a lot of grant money flowing through. And if you look back on page 56. Now, this is what's done with the schedule of expenditures of federal awards. This is federal money that you spend. This is not the county's money. This is actual federal money. $15,311,000. Look down at the bottom of the total. That's what federal money was spent. In prior year, it was $9,085,000. So just in that 1 year, there was a difference of $6,223,000 additional federal money spent. Now, think of that in terms of, well, that's 75%. The county came up with the additional 25%. Had you not had the grant, you would have bore this whole expense cash out of your coffers because you had to do the payment. Fortunately, the county had a, what do you call it, Judge? Not a disaster recovery contract with a contractor?
Yes.
Yes. Is that what, did I turn my right, a disaster recovery contract?
Isn't that right, Liz?
That for the debris.
Yeah.
Yes, yes,
Yeah, and for the state.
yes, yes, and that comes, well, your contract is directly with the provider. But the money generally flows from FEMA through the state office of the governor to here. We also have CDBG grants, community block grants, that generally flow through Texas Land or the Department of Health and Human Services, and those are identified. And when I think of grants, anything with a 97, starting with a 97, that's Homeland Security. Anything with a 14 is Department of Health and Human Services. with the receipt. And you've got, the biggies were the CDBG disaster recovery grant that came through the Texas General Land Office. One of them you were awarded 18 million, one of them you were awarded 9,800,000. And out of that, you spent right at 10,575,000. So you still got a lot of money to go in just those two grants. And then your hazard mitigation grants are up at the top in Homeland Security, and those are located in what we call CFPA numbers. Those are 97, 97.06, and 97.39. You got some CARE money, which is the CARES Act, which passed by the government for coronavirus. I have never seen the government come in and give you an advance like they did on this particular grant. They came in and gave you $200,000 based on estimates that were provided to them. I've never seen the government fund an estimate. Generally, all of these grants are reimbursement grants. In other words, the county spends the money. You turn in the invoices with what's called a project worksheet, and you're reimbursed by the government. But you're out your money first, which leads us back to cash flow. A couple of things that you're facing this year, and when I say this year, is in 2021. The Newton County Public Facilities Corporation, which is known as a component unit. A component unit is something that you include on your books, even though it's a separate entity. And the reason you call it included on your books is you have control of it, either financially or, in this case, financially, and the commissioner appoint the board of that public facilities corporation. In prior years, it was made up of primary commissioners. And I believe that some former commissioners were still on that board. I don't know if anyone sitting here is or was, but you are required to prison. You went to the bondholders and said, bondholders, these are revenue bonds, not producing any revenue. We will buy the prison back from them. And they agreed, and you took it back. Along with the component unit, the county has what's known as an enterprise fund. An enterprise fund is something that acts like a business that has income. The enterprise fund that you carried on your books collected revenue from the prison for operating expense. It came in the form of, quote, rent. And it was based upon the number of prisoners that was out there, and they paid the county a fee. Of course, that fund really hasn't been active in a number of years since the prison's been closed. Those two funds will need to come off of your books in 2021. You will need to come back on your books with an enterprise fund to account for the money that you're going to be collecting from other counties for you keeping the prisoners out of the prison. And I suspect that you're already doing some of that, is that correct, Sheriff? So then again, do the work. Okay. Ms. Moore, has the Public Facility Corporation and the Enterprise Fund, have you taken that off county? That has not been done. Commissioners, I asked of you to provide her the help that she needs to get that done, because that is some pretty complex journal entries that are going to be made, and some calculations that need to be made to calculate the gain or loss, because you have to come up with something to clear it from your book. That's the way you do it. gain and loss. And I suspect that the Public Facility Corporation will win one heck of a loss in 2021. So I implore you to give her the assistance. And speaking of assistance, when you changed county auditors last year, you took someone from the for-profit accounting world and took him into a position of governmental fund accounting, which is totally different than what she may have been accustomed to. We have what's known in acronym, we like acronyms. We have what's called SKE, SKE, skills, knowledge, and experience. Before an auditor can take on an engagement, we have to establish independence. And part of that independence is determining whether there is someone at the county that possesses the skills, knowledge, and experience that can accept responsibility for the financial statement. These financial statements are the county's financial statements. They're not ours. They're not anybody's down the street. These are your financial statements. These financial statements this year were written by a consultant that Ms. Moore asked the county judge, I need some assistance. So you hired a consultant. That consultant put the books together, got them in audit form, and produced financial statements that we were able to audit. If you look at our engagement letter, the very first paragraph states, we will audit the financial statement. It doesn't say we're going to audit the general ledger. It doesn't say that we're going to write the financial statement, because by rules, we cannot. And these are pretty complex statements. You've got multiple funds. And an auditor who doesn't, at this point, possess the scheme. So coming up on year end, you're going to need some assistance to pull the books together, get that component unit off, get that enterprise fund off, book an enterprise fund, distribute to the commissioners, the road and bridge fund, the various tax revenue that you've been collecting for the last 3 months. That in itself is more complex than, would you agree that that's probably the toughest inquiry that needs to be made year in? Without the scheme and without the systems, you're not going to be able to get there. And I think Ms. Moore will agree with me on that. So she's going to need your assistance, or she's going to need a consultant. It can't be the auditor, otherwise we would be auditing our own work, and that would violate independence. So before we get into the financial statement, after everything I've just said, if you've got a question or two for me, interrupt me and ask me. And I'll just pause for just a moment and see if there are any questions.
I don't,
Okay,
well, I got one question.
go ahead, sir.
This is my first year, so
Yes, well, that's why.
I'm learning. If she didn't have the skill, the knowledge and experience, who set her up in this office?
Could be what?
Who put her in this position?
I presume well, I can tell you she's appointed by the 3 district judges.
I said, I'm new. I'm
Okay. No,
trying to figure some stuff out.
She doesn't answer to the commission. She answers to 3 district judges. And there's a very clear reason for that. It's because of the fact that if you guys decided that I don't agree with her, or I want to change, or she's not doing it the way I want her to do it, Well, this puts her in a position where she could be an auditor and not have to worry about getting fired. The only control you have over that department is the budget. Now, I've seen one county, I've been doing this since 1985. And 90%, it's a long time, sir. 90% of the work that I do is governmental accounting. Counties, cities, no more school districts. I was glad to get rid of those. But water districts, primarily government. I do a couple of nonprofits that gets federal money. And I do a federally funded health. Well, too. Audits of banks and taxation. I love banks. I do a lot of fraud. But I'm primarily 90% a governmental auditor. Been doing this 36 years, and I don't know what yet. It changes every year. And while we're on that subject of changing, what you're looking at here for government entities with year ends that end after December 15, 2021, this report is going to change. You'll be looking at a new report next year. New consideration. With grants, there's a couple more compliance attributes that need to be looked at. One of them is a big fraud, waste, and abuse. And I funneled this to former auditor back 3 years ago. This should have taken place in 2020, but it was kicked down the road because of COVID. And I think I sent this board that about the fraud, waste, and abuse that you're going to need to be looking for next year. Not saying there is fraud, waste, and abuse. You've got the document that you look at. Just as you document, is it an allowable expense? Is it allocated? Is it in the proper time frame? Is there any kind of equipment like the 75, 25% that we were talking about? So, Commissioner, being new, like I said, it's a different world. But as we go through the state, normally my presentation only lasts about 10 minutes because I get to get some happening. Being the fact that we have some new commissioners and we have these questions is why, and we have a new auditor. This is why I'm taking the time to go through it piece by piece.
I appreciate it.
You're very welcome, sir. I would like to call your attention to pages 10 and 11. These are what I referred to earlier is the government-wide financial statement. These came into existence approximately 15, 16 years ago in an effort to make these statements look more like for-profit statements. If you recall, I told you in the fund statements, we don't carry assets and we don't carry debt. So the first statement you're looking here on page 10 is what's known as the statement of net position. Again, a terminology change in the for-profit world. This is what's known as the balance sheet. To analogize that, if you can picture a photographer coming in at 12 midnight on December 31st and taking a snapshot of the county's financial position at that particular moment, at midnight on December 31st, 2020, this is what it would look like. It starts off with your assets. It starts off with the liability, followed by liabilities and the net position. The first column you see there is what's called governmental activities. This is your general fund, your distribution fund, payroll fund, and all the various governmental funds the county has, which includes grant funds. It includes your road and bridge funds. It includes commissioner special funds, prison guard funds, sheriff. All of those governmental funds are totaled in this column. It includes your assets, and it also includes your capital assets, and it also includes the debt. The next column are what's called business type activity. This particular column carries your Public Facilities Corporation, which is the component unit. And it also carries an county fund, which is known as the Enterprise Fund, which, as I told you in years past, you collected revenue from the Public Facilities Corporation. The items of special interest on this page, of course, cash decreased by $2,400,000 for prior year. Now, when we say decrease, where was the cash? What happened to the cash? Well, we spent it and then we turned it into reimbursement. And you will see on the next line item there, accounts receivable. In prior year was 133,000. In current year was right at $1,500,000 for a difference of $1,354,000. That money was out there at year end, which was collected in January, February, March, somewhere in that time frame. After you turned in your project worksheets and your invoices to the government to get your money back after you spent it. That doesn't, remember I told you that these were reimbursement rates. You got to spend the money first, the government reimburses you with the exception of that $200,000 that they fronted to you based on estimate. Debt-wise, the current debt, now this is debt that is due in 1 year within 12 months. And then you see due after 1 year. Well, in prior year, the debt due at 1 year period was $621,000 versus in current year, $658,000. If you notice under business type activities, you will see that $9,490,000. These are revenue bonds that were issued by the Public Facilities Corporation for the purchase of the prison back in. Those bonds will need to come off of the books this year. And then I have not seen the document of how you pay for the prison in current year, whether or not that's going to be a bond issue or whether that's going to be a note. I haven't seen those documents because that happened in 2021. On page 11, this is what's known as the statement of activities. In the for-profit world, it's known as the income statement. The major difference you see on this particular statement is that in the governmental world, we show the expenditures first and then the revenue last. In for-profit, you would normally see the revenues at the top of the page, the expenses, and then your gross profit. Of interest here is the, under program specific grant, this is the 15 million that you spent. In prior year, it was 8,200,000. So that's the big. And then under the regular expenses, this is generally the governmental activities. These numbers also include depreciation. And when we get back to the fund statements, when I talk to you about C1 ties back to the statement of financial position, and D1 will tie back to the statement of activities. This is where you'll see the reconciling items, and that would include depreciation. On page 12, under fund accounting, remember I told you that on the government-wide statements, we call those statement of deposition and statement of activities. On the fund statement, we go back and call those balance sheets. Statement of revenues, expenditures, fund balance. So the general fund which is the first column on page 12. And then you've got major funds and then non-major funds. These are your governmental funds. Now, the difference between a major fund and a non-major fund is basically what the county says, these are my major funds. With the exception of, there are some rules that say, if you expend X amount of your total fund balance, it's considered a major fund. If you don't extend that amount, it can be major or it can be non-major. That's just entirely up to the county. At the top of each of those columns, this is something that we put up here as auditors, just to give us a general idea of which particular fund that we're looking at. Under the general fund, you'll see it's fund number 5, fund number 10, fund number 98, fund number 99. And then, of course, you see road and bridge, general, you'll see 20, 68, 70, those are the fund numbers. Now, when we get to the total non-major funds, those funds begin back on page 44. That'll be 44 through 47, I believe. And those total back to those non-major funds. So if you want to look at what are those individual funds that total back, you can go back here and you can see them each program. Next page on page 13, this is the exhibit C1 that I told you that would tie that fund statement back to the statement in that position, which is back on page 10. And you'll see the reconciling item here, and you will see the long-term liability, increase, decrease. You'll see some pension costs. You'll see other assets not available to pay current expenditures. And then this is generally property tax that you earn, but they're not due. In other words, this is one of the few governments, I only know of 2, that have December 31st year ends. Most governments have 9/30 year end, including the federal government. For whatever reason, Newton County has a December 31st year end. So your tax office operates, if they assess taxes October 1st, those taxes are not due until January 31st. Even though you're still operating those 3 months, October, November, December, those taxes you collect are actually, taxes are always 1 year behind. So because of that lag, those taxes aren't available because they're not due until January 31st. So again, back to government accounting, that's just a little caveat. In the for-profit world, you collect the money, even though it's due, even though it's unearned, you still have cash in the bank and you can spend it if you want to. Not, but you designate it down in the financial statement that is really unearned revenue for the prior year. Okay. So. On page 14, statement of revenue, expenditures, and changes in fund balance of the government. For-profit world, this is your income statement. This shows your income, well, I call it it's revenue. It shows your revenue, your expenditures. And if you will notice about a little over half the page down, you see a line item called debt service. See that? Find it button. Okay. Debt service is where your principal payments and your interest are charged directly to the income statement. On the government-wide statement, the principal payment payments are charged to the debt, reducing the debt on schedule exhibit A. And then the interest is charged to exhibit B, the statement of activity, as an expenditure. On the fund statement, they're both directly against the fund. Right below there, you will see a line item called capital outlay. In 2020, the total capital outlay was $1,228,000. And that is charged directly to the fund statement. On the government-wide statements, they were charged to capital assets. They were booked as capital assets and they're depreciated. Same thing with the debt that went along with them, and you will see issuance of debt under other finance sources about 4 or 5 lines down. There's the issuance of the debt, and that's charged directly to that's like a revenue to these statements. To back on the government-wide statements, it's charged as a liability. So that's primarily the difference between fund balance, particularly the fund statement, and the government-wide statements. Now, we talked about in the beginning about why the fund balance was carried forward year to year. It's not cash. It's like equity. And if you see down at the bottom, we start out at beginning fund balance. We add the difference between the revenue and expenditures coming forward, and we end up with ending fund balance. That fund balance will tie back to the government-wide statement. It has to, the equity just in the core property has to come forward to reconcile and make the statements balance. Without that, your statements wouldn't balance. So that's why the fund balance has to come forward. And I think the question came up primarily because during the budgeting process, some commissioners were thinking, well, if that's fund balance, I've got that cash to spend. Well, it's not cash. It's equity. It has to come forward in both the budgeting process and the statements in order to make everything balance. Because everything, you'll notice that these funds flow from statement to statement. The next page is D1. This is where the reconciliation between the fund statements and the government-wide statements come from. And you'll see the capital outlay, you'll see the depreciation, and then you'll see capital assets that were disposed of. These are either obsolete equipment, an obsolete piece of office equipment that you had broke down, you're not going to use anymore. And while we're on that subject, the county has a capitalization policy of $5,000. So if you buy a calculator that costs $400, $300, whatever, you should write that off as an expense to the fund statement, not the capital outlay. The only thing that should go into capital outlay is anything that is $5,000 or more. All the rest of it should go to expenditure, because your capital outlay has to tie back to the assets purchased that you depreciate. Now, historically, auditors, not just this county, but across the board, we're always looking at capital outlay because that's kind of like a catch-all. We might be going through capital outlay and we might see $2,000 worth of road base. Well, that road base actually should be charged with material, not capital outlay. We don't say much about it because of the fact that we're just glad that it's there. And we'll make a journal entry, propose a journal entry, and it'll be made, moving it capital outlay to somewhere else. And now your statements for balanced capital outlay now ties to the acquisitions of capital assets. Depreciation is carried forward year to year. most of the items that you have on your depreciation schedule are pretty much depreciated because we depreciate those over the life of the asset. Newton County, as I said, when you buy something, you generally finance it for 3 to 5 years, and within that 3 to 5 years, and maybe before, you're trading in on something else, and then we'll have to recalculate that depreciation, or your auditor will recalculate that depreciation and make the adjustments, either gain or loss, and then on capital assets, that gain or loss adjusts the current basis of the asset, rather than recording a gain or loss, it just adjusts the basis. So if you had a $100,000 gain on a piece of asset, you bought an asset for $300,000, you net the two together, and now you can depreciate $200,000 rather than $300,000 because it rolls over. It's not recorded as a loss. You sell something, we're going to record the gain or loss. And going back to a prior statement, under other revenue, which is proper to put insurance proceeds, you had a big insurance claim, and that's where that revenue goes. It goes to other revenue. So to see that number, $100 and something thousand, generally you can assume that you can ask your auditor what's in that particular line, and you'll find that it is insurance proceeds. Because as an external auditor, we ask that question, which we want to know. Beginning on page 16 and 17, you are required to, in your financial statements, give a budget comparison of your actual and final results. During a budget is no more than a roadmap. I think you will find that the budget in most governments may get adjusted as much as once a month. They come to commissioners or they come to council and they ask for budget amendment. And that's fine. You should amend your budget. Some folks don't. They adopt an original budget, they stick to it, they don't make amendments, and they end up with a shortfall or an overage. And it's okay to have a negative budget. It's okay to call it deficit, but it's okay to have that as long as you can explain to your taxpayers why we have it. In this particular case, you have an original budget, column 1, and this is what you first approved prior year for 2020. And then you have a final budget, and that was your last budget amendment. During the year, you may have had 6, 7, 8, 9, 10, multiple budget amendments. But we show an original, we show a final, and then we show your actual results and your difference between what was budgeted and what you ended up at. Beginning on pages 18, 19, and 20. These are the two funds that were back on the government-wide statement that were business-type activities. The first one you see there is the enterprise fund, which is a commercial facility. And then the component unit, which is your Newton County Public Facilities Corporation. And you'll see those funds total. And they're separated because of the fact that they are business type activities. On page 19, this is the income statement. And you'll see that there was no income statement. There was no income. Now, the assets are recovered or recorded in business type activities. They are different from fund accounting. You record your assets, you record your debt, and you record the depreciation on business type. In a city, you have a water department that sells water, sewer, garbage collection. All of their assets are recorded in those statements because they're business type. On their general fund and their other government funds, they are not recorded. You are also required to produce and submit a cash flow statement, which is on page 20. Cash flow statements have a direct method and they have an indirect method. The down and dirty is the indirect, it's the easiest one to do, but requirements say you've got to produce a direct method. And that's what you see here. And this is on the business activity. On page 21, the county has funds that belong to other folks. They're called fiduciary funds, agency funds. This is whereby, let's say the district clerk, one of the district judges has a hearing. They find in favor of a minor that he's got $200,000 of mineral interest coming when he reaches the age of majority. The county holds those funds through the district clerk's office, deposited at the bank, and they're reconciled basis. The tax assessor collects money for the state of Texas, plates, boat paddle, whatever, and also collects taxes from other entities, school district, city, other ESD, or whatever. Those are trust funds. Those belong to other people. The county is responsible for them. That's why you see them here in the financial statement. Those are reconciled on should be reconciled monthly. Newton County historically, the auditor ends up with the reconciliation. They can be complex. I don't find I suspect your auditor doesn't find them to be, but we've had some problems in the past. The auditor gets here, where are the agency funds, trust funds? Oh, well, here are all the statements that haven't been reconciled. Each department should be reconciling those on a monthly basis. They should be provided to your auditor. Your auditor go in occasionally and perform a look-see. That's what the auditor's responsibility is.
Yeah, and books and office, I don't know, look at it time.
So, again, this is a matter of how your auditor wants to handle it. If I were the auditor, I'd probably want to do it myself because I know it's done right. It's harder to come back and clean up the mess and do it right. I have my strengths, I have my weaknesses. One of my weaknesses is delegation. Because I just know that if I do it, it's going to be right. And I cause myself more headaches by doing that, but that's just me.
So is that number figured into our tax collection, or is it not, or is it separated?
It is not in your tax collection.
Okay.
It is separated. This is what, at December 31st, this is the snapshot. This is what you owe other people.
Okay.
That you're responsible for.
Ever since.
And this particular statement you're looking at here, this is for information purposes. This is for disclosure purposes. These numbers are not in your financial statements.
Okay.
It is shown here because of the fact that you're responsible.
So are we responsible for that? Or is he
Their
responsible?
accounts in the bank.
No. Who's responsible? Are we responsible
The
or
county is.
the county is?
Yes, in other words, if that money walked off tonight, you still owe that money to someone. Now, I suspect you've got a bond around here. I know you've got bonds. I know you've got some insurance, but you're gonna have to have a herd of auditors down here going through it, figuring out how the money walked off with the, because bonding companies won't pay on a calculation. You have to show them where the money walked out the door. You just can't give them a reconciliation and they say, okay, well, this didn't reconcile, you're off by this one, they'll pay you. It don't work that way.
You ever seen that number?
So
I asked him, did he ever see that? Has he ever seen that number? No. The answer is no.
okay,
First time I've ever seen it.
what's in it?
I understand. My fault.
Been in there
Well-
every year. Yeah, for years.
Well, Commissioner, I'm glad we took this opportunity to go through this report detail about the
Yeah.
because it is, as I started out, the governmental world is completely different. It changes, you know, it started changing back 15, 16 years ago. The for-profit world really changed in Ron and that bunch. And we got more rules. Personally, in order to do this kind of work, we have to have 8 hours of continuing education every 2 weeks. 26 of those hours must be focused on what's called billable audit, single audit. Because this is a single audit, and I'll explain that to you here in just a little bit. The rules change, and that's why you're seeing that more and more accounting firms are getting out of the governmental auditing world. Because they make more money just by going in, assisting governments in getting their books ready for audit than they do actually coming in and do the audit. This particular job is budgeted 240 to 260 hours. That's how long it takes us to do Newton County's audit. I came in, I was just a tiny bit above budget. And the reason for it being is that in years past, and no disrespect to your auditor, but she's on a steep learning curve, very steep. But the information got to us on or about third week of August. And then from there, the auditing process begins. I think I came in right at the high 240s, just shy of 250 hours. Because it was a time crunch. This audit is dated, if I'm not mistaken, September 27th or 29th, which was it?
27.
27th.
I think it was.
27, yeah, it was important to get this done because in a single audit, you have what's known as the data collection form due to the clearinghouse. The federal clearinghouse is where all of your grantors go to get your financial statement. So everyone that has a single audit, the data collection form is due 9 months after year end or 30 days after presentation. So it was important to get this thing dated and submitted before September the 30th. However, at the last minute, Sharon Reed, one of our CPAs here at the firm, I get an email from Sharon that, have you seen? And I looked at it and it granted an extra 3 months extension on the data collection form. Well, I'm kind of conservative. I don't like banking on somebody else's word, even though it's right. We wanted to get this, we wanted to get it submitted. We upload our portion of it, we upload the statements. I think you got an email to electronically sign off on it. So Newton County is good. All your grantors can go to the federal clearinghouse and get copies of your audit. There are still some grantors out there that insist on getting their own copy. They'll email, they'll ding this one to death saying, I haven't got your audit yet, send it in. When are you going to get your audit? I think you emailed the PDF copy. There's still people that ask. There are still some people in this world that ask for a paper copy. So we provide you with paper copies, extra paper copies, send it to them. But they're all guys like me. I like to hold it in my hand. The next portion, beginning on page 22, are the notes to the financial statement. This gives a pretty good idea of how the county operates, what the statements mean, how you account for various transactions. I encourage you to read through this. When I get an audit report, like if I walk into, first thing I want to do is I want to read the notes before I look at the statements. Because the notes are a roadmap of how the statements are produced, what's included in those statements. It gives me detail, what the capital assets are, what the debt structure is. It gives me an idea of what the receivables are. And then it also tells me about subsequent events. What happened after year end, December 31st, 2020, until the date of the report that I may need to know about. For instance, if you would have got a major lawsuit that your insurance company did not cover, then it was, we're going to have to pay $2 million. I consider that material, and I would have booked that. I would have booked that as a liability because it was known it was some certain, and it was something you were going to have to pay. There's no appeal, no nothing. We're just going to have to pay it. So, as an auditor, even if it happened after year end, I'm going to report that. That didn't happen, so don't use my example. On subsequent events, you had 3. You had the virus. You had the agreed upon judgment, which was one of your taxpayers challenged the appraisal value of their property. And then you had the dissolution and the conveyance of property, which was the acquisition of the group, which happened after year end. Now, when I was looking at that agreed judgment, first thing that hit my mind, okay, well, if one taxpayer is going to do this, what about other taxpayers? How is that going to affect the county? I immediately sent an email. I asked for a list of the top 10 taxpayers in the county. I quickly did a calculation. Although if that did happen, it would be an inconvenience, but it wouldn't break the county. Because all of that money theoretically is due immediately. But most entities have an interest. They're working in your community. They have an interest in that school district being a function. They have an interest in the county government. So they're good citizens. I don't believe they would demand it. They could, but so I took that into consideration and just left it as a substitute. Looking. The virus appears to be with us for the long run. Just got to learn to live with it. Newton County was fortunate. We didn't have to lock down as much up here. You were a small county. You didn't have big outbreaks. I suspect you did incur some expenses for PPE, masks, hand sanitizer, and what have you. I know the sheriff saw the thing going out there. On the prior page, on page 40, and there's nothing wrong with this, but we have to disclose it. It's called a related party transaction. And before an audit gets started, the first thing we do is we send to the commissioner and various select individuals here in the county a questionnaire. And one of the questions on there, are you aware of any related parties drawing a salary, getting a contract, doing business with the county? And I'm aware, because I asked the question, that there is a related party transaction here in the county. It is an arm's length transaction. It is fair market value. It's just as you went out with another individual who wanted to do business with the county, and you made no special consideration from your IT support and hardware. So we disclosed it. It's a requirement. And most commissioners, when you're doing the questionnaire, you really don't think about it. So the question is are you aware of any related parties? And most of the time I see the answer no. Most of the time on all those cities, I say no. I see no. Now with staff and other department heads, we send out what's called a Statement of Auditing Standards 99 questionnaire. Are you aware of anyone who has misappropriated assets of the county? Are you aware of anyone who is receiving excess benefits or undue assets? This is our way of assessing risk, fraud risk, not necessarily theft, but the misstatement of financial statements. So in the for-profit world, it would benefit a manager of a location to inflate his numbers, to make those numbers look good, to keep his job. So he might inflate revenue, or he might inflate whatever, or decrease the liability to make his numbers look good. Job. I have never seen that. And as I said, I've been doing this 36 years. I've never seen that in a government. I've seen it in for-profit business, but I've never seen it in a government. During the course of our audit, we see your bank balance. We see the reconciliations coming out of the treasury. We don't take that for face value. We confirm those balances with the bank. We confirm your receivables with the tax collector. We also look at historical analytics to see that your tax collections are more or less consistent. If I saw your tax collection $2 million more this year than what I saw in the prior year, and that assessor over there is telling me that your actual collection was $2 million less, I'm going to look at those statements and I'm going to find out why they were overstated. So every number that you see in these statements, when we say they've been audited, the bigger numbers, we do work on the materiality level. The bigger numbers, we confirm, we verify. Now, we don't look at every transaction. We look at samples. If I pull a sample of 60 expenditures, 60 invoices, and I'm looking to see if those invoices have been properly approved for payment, that the check matches the invoice, that the materials that are listed on that invoice appear to be county-related expenditures, road base, various supplies. But if I see a baby bed, or I see a bunch of Christmas presents, or something of that nature, then it's going to go off in my mind. So if I look at a sample, and the sample's clear, I'm going to make a notation in my work papers of what I look at, what specific numbers I look at, what invoice numbers, and that I found no deviation. When I look at your grants are a little different in that there are what's known as compliant attributes. These are attributes that the federal government says that you, the county, are your grant administrator. You're still responsible for it. And when I say grant administrator, the grant administrator located in Buckhead area, Jasper, There's Griffin Associates down in Jefferson County. It starts out, it's A through N. Each letter means something. Eligibility, matching costs, time of expenditure, availability of funds, matching. And in this year, we've added fraud, waste, and abuse, reporting, all of those attributes. When I look at an invoice on your grants, I'm looking at those specific attributes. What apply? Now, when I do this, I generally set plus or minus 1. If you miss 1, it's an error. If you miss 10, I'm going to have a finding. So I like plus or minus 1. That's just me. The tables say plus or minus 3. We have charts that we go by. Because as auditors, every third year, we go through what's known as peer review. Reed and Associates, we do approximately 90 plus audits a year. The peer reviewer comes in and we pay this guy $6,000 to $8,000 to come in our house. And he picks 3 audits. He'll pick a single audit, he'll pick a for-profit audit, he'll pick something else. Generally, it's another single audit. But Newton County, 2 years ago, did peer review. So the peer reviewer takes my work papers, compares those work papers, in my opinion, back to the financial statement to see that those work papers support the opinion in the financial statement. So we're peer reviewed every 3 years. So it's important that I don't come in here and fly off a number to you that's not supported, because I'm going to get dinged in a peer review. If we get dinged in a peer review, we can't audit. So our livelihood depends on, and that's why we have quality assurance that we run these through in-house, and we also send them to another CPA for us to review them before I even step foot in your property to present it. So I encourage you to read through the notes. It's a roadmap that tells you how things are done. I pointed out to you earlier that all of those non-major funds are here in the back. You can look at those. The next part of the report is known as a single audit section. If a governmental entity or even a nonprofit or for-profit receives government funds and expends more than $750,000 of government expenditure, you have to have what's known as a single audit. It costs the county more because of my budgeted amount of 240 to 260 hours. Without the single audit section, I might be able to cut that down to 200 hours. So because of the fact that you expended, not received, but expended more than $750,000 of government funds, you have to have a single audit, which is subject to those compliance attributes that I told you about earlier. Part of the single audit is we make some representations, the 2 letters you see. Independent auditors report on compliance for each major program. A major program, in this case, is a program. Each grant is either non-major or major. And the cutoff for that particular item is $750,000 is going to be what's called a type A program, and anything $300,000 is going to be a type B. And also, state grants are going to be considered a type A program. So we look at both state grants and federal grants. Those are the 2 letters you see, and we found no deviations I think I found the one invoice that maybe didn't have an authorization for payment, but it did have the department head signature on it. So I don't consider that anything more. On page 56, this is what's known as the schedule of expenditure of the federal awards. These are the federal grants that you spend money on. And these are expenditures, and you will see that in the last column. That doesn't mean you collected all this. This is what you spent. Because if you look back what I first told you, you had like, what, $1.6 million, was it? That would be back from the federal government. You already spent that money, but you were due the money back because it's a reimbursement grant. However, you spent the money and it's reported. Now, did you pay cash for all of this? Probably not, because receivables, payables. If your auditor's office received an invoice on December the 28th, and it was for services that were in the current audit year, that's reported as a payable. Even though you haven't paid, it's an expenditure and it's reported as a payment, even though it doesn't get paid until January. Newton County historically has had, your payment process is pretty quick. You generally turn payments around within 2 weeks. That fair statement. Turn payables around pretty quickly. Most entities, they pay on a 30-day net basis because some places will give you a discount. If you pay it within 30 days, they'll give you 2% discount. So they want to conserve their cash and hold that for 30 days. I talked to you in the beginning about cash management, cash forecasting. Between the treasurer's office and the auditor's office, the two of them will know exactly how much cash you got today. You know what your cash requirements are going to be coming up within the next 30 days, because a lot of these bills are repetitive. Light bills, they generally run about the same. Cell phone bills, they run about the same. You can look back historically and figure out how much road base you need, period you need. So you generally have a good idea about what you spend every 30 days. So you can cash forecast. If you see you're going to run short, you know what your payroll is. The biggest expenditure you have in the county is payroll and benefits. So you know what your expenditures are going to be. You know what your revenue is going to be because you got tax collection. So you know how much cash you got on hand. So you can forecast cash. If you catch yourself in a cash position to where you're going to be a little short, you might turn that instead of paying at a 2-week interval, you might pay at 30 days to slow down the payment and conserve your cash. It's cash management. Part of cash management is also knowing what I have out there in project worksheet with the grant that I'm going to get. Now I'm going to pick on the sheriff for a minute. This did not happen on your watch. I came in here one year and I was sitting right where this gentleman sits. And I got to looking over what was purchased. I got to the sheriff. And I saw 100 and something AR-15s.
Wow.
You remember that?
Now, what sheriff that was?
I went immediately to the auditor and said, what is this? And she said, well, we had some grant money left over. Well, we never want to leave grant money left over because the government's going to want it back. But then in turn, somebody had to account for those 100 and something AR-15. So when I went to lunch, I just stopped by the sheriff's department on the way over there, on the way back, and I asked. He said, what you want to know for? And I said, well, I said, it's an asset of the county and I'm trying to account for none of your business. I said, Sheriff, I gotta know where these are. He said, well, I got 2 of them out there in my car. So-and-so's got 3 or 4, got 6 or 7 of them in my house or what have you. I said, no, I said, I need to see these. You're not gonna see. So, well, while I'm over here, I want to count the inmate cash. Ain't none of your business. Well, I back off. Auditors know when to back off. It wasn't that important. However, I did want to see the impound one. Because your sheriff department impounds vehicles. Some of these vehicles have liens, some of them are paid off. Some of them you may let the city have a bar for undercover work, you might switch out with them or whatever. And I never did make it to the impound lot because I got distracted by some kind of war vehicle. That's all I know. It wasn't a Hummer. What was it? Some kind of assault vehicle. What? I got distracted by it. I backed off of that. But a year later, a pickup truck that was on the impound lot happened to be traded in to a local dealership with a fictitious pack by the sheriff himself. So part of the auditor's responsibility is to audit those departments. Now, the auditor ain't gonna be well liked. Nobody likes to see an auditor come. Nobody likes to see me come. But I ask questions. But that's part of the audit process. I try to shoot straight with you. I try to tell you problems as they come up. I'm very concerned about your year income. Without support, you are not going to be able to be audited. The auditor is going to need your support. Now, whether that takes hiring an outside consultant or whatever it takes. External audit can't do it. We'd be violating our independence. So with that said, I talked for, gosh, an hour and a half. That big 10-minute presentation.
But I appreciate it.
You're very welcome. I hope it was enlightening. I know it
Yeah.
was very. Now,
So with your opinion, how's it looking for this year coming up?
for 2021, I haven't seen your number. I don't know that you've got numbers ready to be seen. I can tell you you've got numbers ready to be seen.
Okay.
Thank you, Frank, 2021.
Say that
I
again?
said, we're still in this year. We're still in the year. It's not that you're in it. You know, well, probably January. We're still gonna have bills coming
If you're
in.
like any other government entity I've ever seen, we got 3 days to the end of the year, it's not 78 years old. Hey, your books are
We
closed.
still have
But
bills
as
coming
far
in.
as,
We're
you
paying
know, we're
bills.
still holiday. We're still holiday.
Actually, they're paying bills today.
But when do you cut that, just for us to know, in this, since we're talking about it, when do you cut that off? Do you cut it off in November or do you cut it off December 31st?
You cut it off December 31st.
Okay.
Now, you're gonna have some things straggling in January.
Right.
You have some invoices straggling in that are dated December 25th, December 28th, whatever.
Right.
So you're gonna have some stragglers.
Right.
You have a general ledger program that I don't know anything about your general ledger program. Theoretically, every transaction that comes through is recorded in that general ledger program, either by checks, journal entries, electronic transfers, whatever. And you should have some kind of number that you can hang your hat on. I can tell you don't have it. Because in order to set that general ledger program up, you've got to tell it where to charge these things, where to produce or where to show it on a particular statement. Now, it generates a trial balance for each fund. In the history of the county, those trial balances were used to compile Excel spreadsheets that were used to write these statements. Now, in my opinion, as an auditor, if the county can produce Excel spreadsheets in this format, you've met the independence requirements, in my opinion. Because I'm not writing statements. I'm not doing anything other than assisting the county into putting something in a formal format. Because the county has already written those statements in those spreadsheets. Now, particular auditor on that learning curve last year got hit with those spreadsheets, and she said, "Oh my God." Because there was a spreadsheet for every fund. Every fund carries that fund balance forward that has to reconcile to prior year, that has to reconcile to a debt schedule, because that debt schedule is going to need to be produced on a spreadsheet because they're not carried in the fund statement. That capital assets are going to need to be carried on an asset depreciation schedule, which you have a program, a separate program for them. It's going to be needed to enter there. And that has to tie back to those government wide statements. Now, I know this is good. I know it's good. As I said, 35, 36 years doing this, and I still don't know it all. I do know enough to kind numbers. I do know enough to bring up last year, the current year, but the rules change. I've encouraged the county to become a member of the Government Finance Association, Officers Association. Go. There are many resources out there that you could draw on. I didn't even get into the pension because of the type of pension. The disclosures you see in the notes of the pension are compiled by actuaries. I don't understand actuaries because you mentioned fictitious numbers. I don't know how they. I told this court before that anybody that claims that they can get you an 8% return on the investment, I want to close my investment accounts and bring it to them. That's what they were forecasting. Now they changed it. Because they got the cancer. All right, I'm done. So I will entertain questions.
Well, all good?
If you have additional questions, you're welcome to call me. As I said, we're coming up on year end. You need to start swinging because we're here.
I think well presented. I think we understand a little bit more than we did when we came in there earlier.
Well, I didn't make you scary. Did not make you scary.
And we got that last year.
What, scared?
Yeah.
Oh, with the hurricane?
I hear a motion to accept the report.
I'll make that motion.
Second. Motion was made by Mr. Thompson, second by Mr. White, that we accept the report presented by Reed and Associates annual financial report for the years ending December 31st, 2020. Any discussion? All in favor, say aye. Opposition, same sign. Hearing none. Unanimously. Number two is authorized to advertise contracts for precinct 4 road repair under DR 4332, project 43,704. Mr. Thompson.
Yeah, these roads were been out for bid twice.
Yes.
And they came in over budget. And we're gonna try one more time. And then
Have a great day.
Thank you. Thank you.
And it's under a project with, Berkeley,
No,
on that one. 16 years. This is under a Harvey project, and we're getting time down that we have to get this done. So hopefully we can get some decent bids in. To be sent it out again within the next week.
If not, trying to do it with forced labor. It's a lot of asphalt, so I don't know if I'm gonna be able to or not, but we're gonna try it.
I'll make that motion.
A second?
Motion been made by Mr. Bomby and second, Mr. White, that we go out for advertise for contractor for precinct 4 road repair, or DR 4332, project 43704. Any discussion? All in favor, say aye. Same sign by opposition, hearing none, unanimously. Number 3, discussion of appropriate accept donation of property from William David Dunn Jr. That's some properties down in the Dewville area. I think there are about 2 or 3 different locations. He's willing to donate that to the county. The Sandy Wood Park subdivision, Indian Lake.
Some of them actually on the river too.
River Road subdivision.
Yeah. He's got some lots there. He called me a month or so ago trying to do something with them. And this is the best choice, I guess. Most of some of those lots are actually in the river now, and they've washed away.
Had John look at it, and he's been working on this, and he's worked up a statement, the market value of $29,795. $795. So, Charles' pleasure.
What we do with this land? Sell it, keep it?
Well, some of it in the river, I mean.
Yeah, he's
some of
trying to
it's in the-
sell it. He's been trying to sell it for a long time himself. And he was, called a doctor, he's not a full-fledged doctor, but
PA?
practitioner. And, he's working for the government. He's in Arizona now. And he had a little clinic there in Deweyville for a while. And he ended up with these lots, I don't know how, maybe through treatment, whatever. But anyhow, he's trying to get them out of his tax roll.
I'll make that motion. We accept the donation.
I say,
Motion was made by Mr. Palmer, and second by Mr. Thompson, that we accept the donation of property from William David Dunn Jr. Any discussion? All in favor, say aye. Opposition, same sign. Hearing none, unanimously. Number 4, authorize advertise for application development project manager and grant administrator for HMGP DR 4485 funding.
This is under COVID-19 funding. We're getting some HMGP money. Little background, it applied to assist Mauriceville Mud with the generator. And we did not get funded in some previous funding. So we thought we would go out for grant admin and try again. They are going, Mauriceville Mud is going to provide the 25% match. It's no expense to the county. They can't apply themselves. So we're gonna try again under this one, see what happens.
What was the reason we didn't accept qualify last time?
I want to say the funding was less funding availability. And by the time I guess they got down to us, they cut the funding off. It's been a couple of years. It was I forgot what the disasters were, but we weren't one of the most impacting things. Since this is under the COVID, it's the whole state. So I forget how much money is available. I didn't bring that with me, but it's several $1 million.
Yeah,
It won't cost us nothing, right?
Right.
this well, actually furnishes all the guest area. Water, and they don't have a generator on it, so when that power goes off, then all the guests don't have any water.
I make that motion.
I second.
Motion been made, Mr. Benson, second, Mr. Palmer, that we advertise for application development, project management, and grant administration of HMGP DR 4485 funding. Any discussion? Not all in favor, say aye. Opposed, same sign. Here none, unanimously. Number 5, authorize advertise for engineering service of HMGP 4485 funding.
And this is for the same project. We have to have an engineer for this.
I'll make that motion.
That's that.
Motion been made by Mr. White and second, Mr. Benson. We advertise for engineering service for HMGP DR 4485 funding. Any discussion? All in favor, say aye. Same sign, opposition. Here none, unanimously. Number 6, discuss and appropriate approved purchase agreement between the Exxon Enterprise Incorporated and Newton County Sheriff's Office. Mr. Burby.
Morning. This is a updated quote for Axion Enterprises body camera. It's going to be 15, and this is going to lock us in for the 2021 price. As of 1 January 2022, the cost is going to go up. So this is going to save us money as well. This is a grant. I think it totals about $25,000 for the work back in midsummer. And bringing this in at this price is considerably low. I'm actually going to have money that's going to be able to pay into the fall from next year as well. So, yeah, I think we'll lock this 2021 price. I appreciate your consideration in doing that. Axion is a top tier body camera.
I'll make that motion.
Second.
Thank you very much.
Motion been made, Mr. White, and second, Mr. Palmer, that we approve the purchase agreement between Exxon and Enterprise Incorporated, Newton County Sheriff Department. Any discussion? All in favor, say aye. Opposed, same sign. Here none, unanimous. Here a motion to adjourn.
I make that motion.
Second.
Made by Mr. Benson, second, Mr. White, to adjourn at 11:40.